Inflation is tipped to reach record levels when the official data is released tomorrow, confirming many of our fears. It comes as Reserve Bank Governor Adrian Orr admits the bank isn't in a good place and suggests a changed approach to government spending the world over. For more on this, former Reserve Bank Governor Don Brash and ANZ economist Finn Robinson. Good morning.
Good morning.
Great to have you both on the show. Love a good panel on inflation. Don, we'll start with you. Adrian Orr speaking to all governments about fiscal spending and about being clear with their communication. What's he saying?
Well, he is saying something that governors have said for a long time: monetary policy needs mates. And if fiscal policy is very stimulatory, as it has been in New Zealand, as it is in the United States, monetary policy has to work harder, and that means interest rates will be higher than they otherwise would be.
So this is the Reserve Bank Governor shifting the interest rate lever, and Grant Robertson, the one who can spend all the cash, the fiscal side of things.
That's right.
They need to work as a team.
Yeah, and Adrian is saying, I'm going to have to increase that official cash rate more because of the extent of government spending stimulus. Yeah.
Finn, this is something that the government hasn't really wanted to acknowledge or in an overt way. But this is pretty clear. Do you think that Adrian Orr is talking to our government, or, as Grant Robertson has suggested, more generally to all governments?
Well, I think, I don't want to put words in his mouth, but I think that fiscal stimulus around the world has been really strong, and that has led economies to be a lot stronger than expected going into the pandemic. But now, with economies being overheated like that, I think they're very much thinking, well, maybe now's the time where you start to think about, well, where's the best spending to happen? And, Adrian or the governor's clearly worried about how inflationary the economy is right now. So I think he's thinking, well, maybe there's time to spend money more wisely, or at least target it where you can, which is something you can't do with monetary policy, but you can with fiscal.
Right. Don, you've always been an advocate of spending money more wisely. And the budget is coming up. So that's what we're talking about here, isn't it?
Yes, that's right. And I mean, New Zealand and the US. The US is in a similar situation. The US has had very aggressive fiscal policy. New Zealand's had very aggressive fiscal policy. And as a consequence, our inflation rate, as in the US, is much higher than, for example, in Australia or Singapore, Japan. Other countries have much lower inflation, despite the international factors which affect all of us, than we do.
Because we spent more during the pandemic.
And of course, initially that was entirely appropriate. No one doubts that we had to have a lot of fiscal and monetary stimulus when the pandemic first broke. The challenge now is to wind that back in a way which doesn't put so much pressure on monetary policy.
Finn, do you agree with that? Were we amongst the highest spenders in the world during the pandemic and now? And are we feeling that in our pockets?
Well, we were particularly high spending with the wage subsidy, for example, but we got pretty good bang for buck with that because we kept employment relationships intact. We didn't see as significant of an increase in unemployment as we would have otherwise. And I think now what you're just seeing is the result of what's been a pretty successful policy response is that now the economy is a lot stronger than we expected. And so now, basically you need to think about, well, how do you control that inflation pulse without derailing the economic recovery? Because
you can't have your cake and eat it too, can you? I mean, you can't stop going to work, shut down factories, etc., and then take on debt, lots of debt, to pay the bills and expect there'll be no consequence of that. No such thing as a free lunch.
That's right.
Okay, so what do we do now? What does the government do now, do you think? Finn, what's the solution? Or the Reserve Bank?
Well, for the Reserve Bank, the policy response is pretty clear, which is they need to keep on raising interest rates. They've had the foot on the accelerator for the last couple of years with super low interest rates and buying assets. And now for them, they need to take the foot off the accelerator and possibly squeeze the brakes, at least until inflation starts to slow down. And it's difficult for the government because, on the one hand, the economy is overheating. Inflation is really strong. We think it'll print at 7.4% tomorrow. But at the same time, there are people who are really struggling. So there are sectors around the country who, for example, tourism, you spent 2 years without your peak international tourism season. So there's a balance there where you've got to think about where are we spending the money best, and perhaps, early on in the pandemic, the answer was just to get the money out wherever you could, and now it's sort of more targeted spending would probably be the best approach, and I think that's certainly what's on their radar.
Don, would you agree with that? And where should we target?
Well, I'm not going to be precise on that point, but Finn's right, that there does need to be more targeted government spending. More targeting of government spending. We don't need more government spending. On the contrary, we should wind that back a bit.
How much?
Well, I'm not going to put a number on it, but clearly what Adrian is saying, the government is saying, the more government spends, the harder my task will be, which means the higher interest rates will be, the higher mortgage rates will be. So one way or the other, we have to cool this economy down. You can either do it by cutting back on government spending, or you can do it by cranking up monetary policy. And in fact, at the moment, both are needed.
Adrian was saying, my lever is working, but it's hurting people, so you need to help me with yours.
Well, he's saying if you don't, mortgage rates will be even higher than otherwise.
Yeah, and we don't want that, do we? Not people with a mortgage, anyway.
Right.
Thank you both so much for your time this morning. We really appreciate you both being in the studio.